Some investors want Microsoft to use its cash pile to make acquisitions. Not our next guest. He'd rather Microsoft use its money and return it to shareholders. Jason Subotky manages $11 billion for the Yacktman funds, 6% of which is in Microsoft. His flagship fund is beating 95% of its peers for the year. He's with us from Austin, Texas. Jason, good morning to you.
Good morning.
So we have been talking about Microsoft possibly taking another run at Yahoo all morning long. There is a report in the Wall Street Journal, I need to reference it specifically, that says Microsoft may team up or is looking for private equity partners and may team up with Silver Lake and the Canada Pension Plan Investment Board to make an offer for Yahoo. Good idea, bad idea?
We'd prefer that they just focus on the businesses they have. There hasn't been a great track record in terms of acquisitions for Microsoft. Frankly, for most of the technology industry, it's a very rough track record.
So, look, Steve Ballmer, let's put it into perspective, right? Steve Ballmer is running a company that, at least according to Erik Schmidt and a lot of other people, has been falling behind some of its technology peers in innovation and performance and growth for sure, if you think about the pace at which Apple is growing or the pace at which Google is growing or the pace at which Amazon is growing. Does it not make sense for a CEO to look at that situation and say, how can I supercharge my growth rate? Sure, I have a great business. It spins off a lot of cash. It earns a lot, but I'm not growing fast enough.
Well, Microsoft doesn't even need to grow to have a very successful investment at this point. It has a very high free cash flow yield. They make more than $60 million a day, every day. And if you just pay out the money every year, it would be more than a 10% yield on the stock. So we don't care about charging out for growth. We are just caring about getting the money back.
Okay, getting the money back. Clearly, Microsoft, but I would point this out, Microsoft has been giving you more money back. If we were to look at a chart, I remember seeing one that we put up a couple of weeks ago. When you compare Microsoft's dividend against its stock price, the dividend keeps going up. The stock price keeps, there it is, the stock price keeps going down. I don't think you can see this. But the point being, Jason, that the stock price isn't helped by the dividend. Yeah, okay, it increases the overall return to shareholders, but the stock price has been going down a whole lot faster than the dividend has been going up.
Well, they've done a great job in terms of returning cash in recent years. It's nearly a 3% dividend yield. They've done effective share repurchase, and we'd like to keep on doing what's been very successful for us. Ultimately, over time, the multiple can only compress so far. And as long as the businesses operate very well and continue to generate that cash, the stock's trading at 7 times earnings adjusted for the cash on the balance sheet, 9 times earnings if you don't adjust for that. And so you just basically need to block and tackle and continue to execute. And whenever you look at transactions, I think there's just a propensity to overpay. Microsoft got into a very heated proposal last time for Yahoo. I think they're already showing, though, they're going to be more disciplined. They're looking at partnering on the deal, and they're looking at only doing a piece at a much lower level than they proposed several years ago.
Well, we'll have to see what happens. We're going to hear from Microsoft when it reports earnings later today. Jason, I know you'll be watching closely and listening closely. Jason Subotky, Vice President at Yacktman Asset Management. He just told us, bad idea for Microsoft to make another offer for Yahoo. Much better to take all the cash and give it back to shareholders.